Alright guys, welcome back to my channel. For the new subscribers, thank you for subscribing. For the viewers, thank you for clicking this video. So in today's video guys, I'm going to be breaking down the 3 concepts that you must master for you to start trading profitably, right? So guys, at the end of the day guys, there's a lot of complicated strategies out there, and we all know the truth that 90% of traders fail. And if you're going to fail, at least go out the easy way, right? And this is basically what I provide for you guys. This strategy guys is very simple, and I honestly believe this is like the most simplest strategy in forex out there, right? But basically guys, the first concept you need to understand, right, is going to be the ICC concept, right? So essentially how the market moves, and the ICC basically stands for indication, correction, continuation. It is really that simple. So essentially the market moves like this in a wave format. So if I was to go to a blank screen right now, you're going to see that the market moves like this: indication, correction, continuation, indication, correction, continuation, right? So the indication starts from price breaking the high, right? So this is the indication right here, and then the continuation is price now then retracing to your area of interest. But the point is guys, that price moves in these 3 phases, right? So if you go back to our chart right here, you're going to see that price is literally moving in these 3 phases. So for example, I'm going to give you a phase like this. So as you can see, price was in a downtrend, right? And then price broke the previous high. Immediately price broke the previous high. That was a change of trend. And as you can see, price started creating higher highs and higher lows. So creating the indication, correction, continuation, and then gave an indication, corrected itself, and then continued the trend, right? So this is basically how we see the market. And as you can see, price was about to correct itself to then now continue the trend, but it then now reversed, right? So this will now be a new indication again, and then continuation, correction, and then as you can see again, same thing happened. Price came and broke the previous high here, and then it started buying up, right? But the point is guys, price moves in this specific phases, right? So your goal is to catch those phases, right? So another phase again is right here. As you can see, boom, price was bullish, creating indication, correction, and then continuation, right? Indicated, corrected itself again, and then continued, corrected itself, continued, give an indication, and then retraced, continued. So this is basically how the market moves in 3 phases. So guys, this is the first phase. Now guys, the second and the third phase guys, you need these 2 phases to tie everything together, right? Now guys, the second concept you need to understand is going to be the pivot point. So just like how price moves in an uptrend, the pivot point is basically going to be these lows. So in the case of an uptrend, the pivot points are the lows of the market, right? And then in the case of a downtrend, the pivot points, right, are going to be the highs of the market. So something like this. So these are the pivot points right here in the case of a downtrend, right? So now the pivot points, we use the pivot points guys to understand what the trend is and to know when a change of trend occurs, right? So in my ebook, I literally break this down for you A to Z. So in the case of an uptrend guys, we determine the lows based on price giving us at least 2 sell candles, right? So in this specific tab here, you can see that this is the before picture, and then this is the after picture of me labeling the actual lows. So if I told you right now guys, as a test to mark the lows here, some people might say this is a low, this is a low, but that's wrong guys. This is not the low, right? The actual low price needs to have at least 2 sell candles. So if I actually go back to this chart right here, you're going to see, right, that whenever price breaks, let's say the previous low, so in this case here, right, whenever price breaks the previous low, which is right here, you're going to see, right, that whenever price breaks the previous low, it's a sign that price wants to change the trend from the current trend, in this case buys, to sells, right? So like I told you guys, the 2 concept now we have discussed is the ICC and also the pivot lows. And like I told you guys, the pivot lows is what we use, to determine what the trend is and when a change of trend occurs. So in this case here, let's say in this box right here, boom, from here all the way to the top here, if I was to tell you right now to mark the lows, right, what would you mark? Now, like I told you guys, based on the concept guys, what you would mark is going to be this low right here, this low right here, this low right here, this low right here, this, right? So these are the lows that you can mark. Now I will explain why this is not a low, right? Actually, let me go back. I will explain, guys, why this right here is not a low. But the point of this is, guys, a low must have at least 2 sell candles. So in this case here, right, you wouldn't call this point a low. Why? Because it has only one, sell candle, and it's not back to back, right? As you can see, these 2 candles are back to back sell candles creates the actual low. Now the reason why I say this is not the low is because, guys, a low, right, a low must create a high for that low to be considered a low. So what does that mean? At this point, when price created this right here, right, this will not be a low until price breaks and closes below this high. So what does that tell you? That means before price, broke above this, these were not considered lows, right? So these right here was not considered lows until it now broke above the previous high. Then you can now consider this as the lows. But now here's the catch, right? So the catch is this, guys. The catch is, although we have, right, this as the lows because price now created a high, this will now be considered the previous low, and then this will now be considered a low, right? So you have to understand my terminologies, right? So because this is the previous low, if price was to break and close below this, we would expect a sell trend to occur right after, right? So in this specific case here, guys, you can see that price was creating higher highs and higher lows, and in this case price created a low here, created a high, and then came back, retraced, and then created a high here. Now this is the previous low that price needs to break for the trend to change from buys to sells. So in this case here, guys, how you would have actually caught this move is very simple, right? So in my ebook I explained to you guys that whenever you see a pattern like this, right, a shooting star pattern, you always take this as a reversal pattern. So this specific candle right here. So if you go to my ebook on page, let's just say page 15 or page 7, you're going to see, like I give you guys specific patterns you need to follow whenever you're looking for a reversal. So in this specific case here, guys, you can see that price gave the shooting star and then you would have taken this specific trade here. But let's say you actually missed this whole move. Perfectly fine, guys. All you literally have to do is wait, right, and price will give you another move again. So in this specific case here, guys, price came, broke the previous low like this, right? Now once it broke the previous low, it now gave this big indication, right? So like I said, indication. The next phase is now a correction. Now usually correction moves, right, they won't obviously retrace all the way up here, right? It might retrace to like an area of interest around this area, which brings me to my third concept. Now my third concept is now going to be the area of interest. So essentially, guys, the area of interest is basically where we see a clear demarcation between buyers and sellers. And what I mean by this is, if I was to tell you right now that, okay, above this blue line, is price buying or selling above this blue line? You can clearly see that whenever price crossed above it, it was buying, right? So this blue line is basically the daily time frame area of interest. But basically how you mark this is very simple, guys. So if I was to go to a different chart, you're going to see that my chart right here is completely clean. So how you mark your area of interest is basically just looking for where you see a clear demarcation, right? So for example, this would be a clear demarcation right here. Boom. Right? Why? Because clearly you see that above the area price was buying, as you can see, and then below it price was selling, right? It's not like this where price is now disrespecting it anyhow, like this, where it's disrespecting it like this or something like this. If I put it like this, where you can see price is like disrespecting it, or like this where you can see that price disrespecting it. No. As you can see, boom, it's very clean, right? And then another area of interest is now here again. So these are the two area of interest I see on the daily time frame, right? So if I was to zoom in, I would adjust this like this. So this is basically how I find my area of interest. As you can see, price was respecting it here. You see, respected it with this wick, respected it, right? So we find our area of interest in daily time frame, and then we go to the 1 hour time frame to then find our area of interest. But guys, the area of interest basically just helps you to understand when a retracement is about to occur and where, the trend is about to continue. So in this case here, let's say for example, right? We already know that, okay, boom, whenever price reaches an area of interest, so in this case it is an area of interest, right? So like this would be an area of interest in a 1 hour time frame. Now, like I told you guys, an area of interest basically tells you when a retracement is about to happen, and you know what I mean, when to take out and when to go out of your trades. So in this case here, guys, we understand that, you know, like I told you guys, indication, correction, continuation. So in this case here, price reached an area of interest, right? But this phase right here is basically the continuation phase. So in this specific case here, you would want to look for a reversal pattern, right? To then now start the continuation, to then now start the correction phase. So in this specific case here, you would have actually caught this whole move here in the sense of a correction phase. So this is basically you waiting for price to correct itself and then now continue the sell, as you can see. So this is basically how you can be able to use the area of interest, you know what I mean, in your favor, right? But guys, if you want to learn more in depth about this, guys, you always can get my ebook, right? Click the link at the bottom of this video, guys, to get my ebook. Like I told you guys, I'm always updating this, right? So I have a new update coming out this week, right? So if you see this, you know what I mean, then clearly I'm still working on the update. But guys, get this ebook, guys. Click the link at the bottom of this channel, and you know you can access this ebook. I hope you guys enjoyed this video, and I hope you guys gained a lot from this. I will see you guys in a different video. Peace.